So Tilray recently reported their earnings, and they saw a huge spike in revenue, and the market seems to have taken it at face value, but where did that revenue actually come from? According to their report, Tilray and Hexo entered into various commercial transaction agreements, including an advisory services agreement regarding Tilray's provision of advisory services to Hexo in exchange for an $18 million annual advisory fee payable to Tilray, and a co-manufacturing agreement. Through this strategic alliance, the company recognized $40.4 million of advisory services revenue included in Canadian adult cannabis revenue, and another $7.7 million in interest income. So the first question is, will they be able to continue charging themselves over $40 million a year in advisory services now that they fully own Hexo? Obviously not, and given that Hexo has negative margin, the numbers will probably look a lot less good once they have to take on their expenses rather than just skimming off the top. So what are Tilray's numbers when it comes to Canna? Even according to their inflated report, it dropped a few percent last year. And when you strip out the pilfering, their revenue declined by almost a quarter. And when you look at Hexo's quarterly revenue, it has declined by over 50% in a 12-month period. And that is because their brands do not offer what consumers in this industry consider to be quality, aside from Riff, I suppose. I discussed this in a fair bit of detail in previous videos, but for now I'll just say, your numbers wouldn't be declining like this in a growing market if you were offering popular products. Tilray's adult beverage business seems to be doing fairly well, and that may continue. It may even strengthen. I don't really have an opinion on that. But, this isn't financial advice, of course, if you are looking for a canna company that's high growth and profitable, maybe you should look somewhere else.